Motivation is what gets you started. Habit is what keeps you going. Jim Ryan. My friends, please hear that. It is habit. It is putting the time aside each and every day to check the markets, to do the work, to do your studying, to listen to the program, to fill out your daily market worksheets every day, except on Fridays when at the close of the market, we record for you the weekly review. And then, of course, that's when you fill out the weekly market worksheet. And every time you do a trade, you fill out the trade worksheet. Why do we do all those things? Why do we make those things a habit? The other thing that I did in my short little video that I do for you every Monday afternoon, last week I spoke about how important it is to make sure you check the market when you're in a trade twice a day. Check it in the morning after idiot hour, see where the market's going. Check it again in the afternoon, about mid-afternoon or so, at least before the market closes. That way you get two good looks. You're not sitting there babysitting it. You're not going to do anything by doing that except drive yourself crazy and make bad decisions. So, again, I just love that quote. Motivation gets you started. Habit keeps you going. Set those good habits. Plan your work your plan. You will be successful. You can't help but be successful if you do things the right way for the right reasons. Let's jump into these charts. Looks like for sure now, I say that, but we thought it might be last week. Right now on Monday, it looks for sure there's going to be a weekly vertical crossover on the S&P 500 and the NASDAQ 100, but we don't know that for sure. We thought it was going to happen this last week. Might happen. It did not. So we'll see if indeed it does happen this next week. It's trying to cross over going up. Derivative oscillators springing up. Price percent oscillator trying to cross over. If the rest of the week is down, though, it could pull right through and die. And you know what? In today's climate, nothing surprises me. We go to the 2-day. What do we see there? That's where we see some weakness, don't we? When you check it out, the last solid 2-day candle, when I say solid, I mean completed, was a red spinning top. Now we have a green spinning top. Means indecision, almost a doji after things boomed up on the Tuesday, Wednesday, things slowing down. So you think, hey, look at that weekly crossing over, going to be strong. Not looking necessarily that strong when you look at what's happening with the Heikin-Ashi candlesticks, and the derivative oscillator is oscillating downward. Price percent oscillators lost some of its push up. Overall, though, things are still moving up on that 2-day, but the weekly, although it's trying to cross over, it's not a completed candle yet. That's subject to change. What do we see on the half day? Well, we see a day of up movement after 2 days of down movement. Hasn't recovered where it started down. So, derivative oscillator still negative and losing a little bit of downward momentum at the end of the day. Price percent oscillator still moving down, flattening, but still negative and moving down. Keep that in mind. It ain't over until it's over. What do we see on the NASDAQ 100? Now the S&P up 0.86%. NASDAQ booming up 2.06%. Hammering up. But when we look at where we are so far this week, where we were last week, look at the high last week. 371.83. What's the high this week? 369.31. So we haven't hit the high of last week yet. It looks like we are trying to cross over going up. Did turn green on the derivative oscillator last week, gaining a lot of momentum already on Monday, but just the first day of a 5-day candle, first day of the latest 2-day candle. It is a green open box, but nothing like the size of the prior ones to the red spinning top when you compare that to the Thursday, Friday. But all those going back over the prior 2 weeks, much stronger. So we'll wait and see. Price percent oscillator still positive, heading up. Derivative oscillator is positive but losing momentum. We look at the half day and you can see where it did boom up, actually making up for the 2 days of down movement and a little more. Derivative oscillator, though, still negative. Price percent oscillator still negative. So we'll keep an eye on things and we'll see just how much tooth this movement has. That's where we are on the stock indexes. Now let's move on to 20-year bonds, down 0.69% for the day. Now bonds, of course, had moved down for two really solid weeks, the week ending 18th of March and the week ending the 25th of March. And then last week slowing down in that down movement. This week, again, starting the week off with just a little bitty green, solid green candle with a little wick on the bottom. Derivative oscillator still losing downward momentum and negative. Price percent oscillator still heading down. It's flattened out some. We look at the 2-day. It is trying to cross over, going up. Now, we'll have to wait and see because that's not a powerful crossover yet. It's just the first day of the latest 2-day candle. Derivative oscillator's already gone green. We have a red open box spinning top. So we'll wait, watch, and see what happens to that 2-day. If that does occur, what does that mean for us? Well, it means it would take us out of a down trade until we had a 2-day recross back in the same direction. So it might allow you to set up for another 2-day recross going down. What about that half day? Well, of course, pushed through it in the morning going down and then further in the afternoon as far as that 2-day trend line. Price percent oscillator, though, still positive, flat. Derivative oscillator positive, losing upward momentum. So we'll see what happens with bonds, particularly on that 2-day at the close of the market tomorrow. This is the kind of stuff you want to be noting in your daily market worksheet. I'm going to put all three of those trainings, daily market worksheet, weekly market worksheet, and trade worksheet, how to fill those out at the end of today's video. What do we see with gold? Gold up for the day 0.48%. Now, of course, gold boomed up to its most recent high back on the week ending the 11th of March, and then has slowly been sort of sliding sideways and then down. Price percent oscillator still positive, but a little less than flat. Derivative oscillator positive and had been losing momentum ever since it peaked back on the week ending the 11th of March. We look at the 2-day. 2-day crossed over going down, taking us out of an up trade in gold back on March the 18th, and has been sliding sideways and then just sort of inexorably down. Price percent oscillator heading down. Derivative oscillator negative, losing some downward momentum. We don't have a trade in gold now until and unless that 2-day recross is going up. What do we see on the half day? Well, it's trying to cross over going up. Derivative oscillator turned green at the end of the day. We can see up some in the morning and then pulling back, losing some of that upward movement in the afternoon. Like we said, only up a little less than 0.5%. So we'll wait, watch, and see. You know, again, our half-day chart just showed us, it shows us intraday movement. Isn't a decision maker for us. This 2-day, I'm hoping it's going to recross going up at some point. Let us get back into gold without losing that weekly vertical crossover heading up. I'm hoping. We'll wait, watch, and see. And the charts make our decision process easy. Don't have to think about it. Don't have to guess. Don't have to bet. You use the charts. What about Bitcoin? Well, Bitcoin was up for the day a little bit. Well, I take that back. It depends on what you look at. Remember, folks, we got different exchanges in Bitcoin. We have things like Bitcoin, Grayscale Bitcoin, which is what? A trust. They own Bitcoin. They mark it to market. They mark it to market based upon the value that they give the Bitcoins that they own. They were up 0.09%. But when we look at our Bitcoin futures, down 1.33, BITO, BTF down 1.08, and XBTF down 1.07. Now, the New York Stock Exchange Bitcoin Index is calculated pretty much once a day. So depending on when the price fluctuations come in, it then recalculates that, of course, for the next day. The reason the chart works on the bigger charts is because it is calculated properly as things flow through time. But in the interim, that is why you see me going and look at these intraday calculations when I get down to like the half day, where we can see it was down in the morning, a little further down in the afternoon. You might say, Tom, why are you not buying Bitcoin at a Bitcoin exchange? Well, I tell you what I like. I like the fact that if I'm buying BITO, BTF, or my favorite XBTF because it has the lowest fees, and I have bought and sold this a fair bit, the thing I like about it is it's an ETF. Now, it is a short-term futures ETF, but I like it because it tracks Bitcoin accurately enough for me. And you know what it costs me to buy and sell it? Zero. Doesn't cost me anything to buy it, doesn't cost me anything to sell it. Bid and ask are close, it's highly liquid, and I don't have to pay any fees getting in and getting out. Now, you can look at the Bitcoin exchanges and see what they're charging you. I'd encourage you, of course, I would discourage you if you're learning. We are not a stock calling service, not a Bitcoin calling service. We're not a crypto calling service. We're not a gold or bond calling service. We're an education firm. We want you to practice with us. Doesn't cost you anything. There is no risk to practice trade. If you start getting good, or you think in your own mind you're getting good, look at what it costs you to buy one share of this XBTF. Cost you 45 bucks. 45 bucks. Now, if you buy $45 worth, one share, and you see how well you do with it. Can you earn 2%? Can you earn 5%? How much do you lose? Chances of it going to zero are about zero, and even if it did, you're out $44, $45, okay? Now, great way to practice when you start getting good is to put a small dollar amount in. We call that fractional trading. Lets you learn how to enter trades, how to exit trades, how to set good till canceled sell orders, really use profit and loss bands, all the things we talk about. And that's why one of the reasons I like talking to you guys about the Bitcoin futures ETFs is they're easy to see, they're easy to track, they're easy to trade, and small dollar amounts. I mean, look at BTF, it's $17.85. Look at BITO, and the nice thing is they move in percentage pretty darn close to what Bitcoin is moving. Now, again, they are short-term futures, so they're not exactly the same, but look at these charts, okay? Here is the New York Stock Exchange chart. Compare it to BITO. Pretty similar. BITF. Pretty similar. XBTF. Pretty similar. Pretty similar to Grayscale Bitcoin. Again, the charts are quite similar. Are they exactly the same? No, but they're good enough for what we are doing. And you can practice on those charts and make your decision. So that is the reason I'm doing this. It's the way. And again, you guys encouraged me to get into Bitcoin, what, a couple of years ago? We've been tracking it for you. I've been fascinated by it. I've started practicing, I've started trading it. And again, it takes a little getting used to with the volatility, but it is fascinating and it does offer potential opportunities. So what do we see going on with all of that said? We see the week starting off as far as candlesticks go. You can see we haven't reached a higher high than last week. We have a green open box candle there. Now you look at these, oops, that's Ethereum. You look at how we've got red open box candles when it comes to everything else. We can, again, that's showing us a slowdown in the up movement for the week. Price, we had that, weekly vertical crossover. And in fact, you know what we've not done? We've not marked that for you. We talked about it. We announced it. We sent out the warning of it occurring or the possibility of it occurring. And then we didn't mark it on our big chart. There we go. So we do have a green, we have up movement occurring as far as a derivative oscillator and price percent oscillator go. 2-day chart, that's where you can see that stall in effect. Let's in particular look at that you can see up some in the morning, losing some in the afternoon. Again, for Bitcoin, not much, but pairing some of that off. We look at our half day, and of course, we can see where Bitcoin had, of course, peaked. And we talked about this as far as you looking at getting in on Friday or not. And again, something for you to practice, for you to look at, for you to learn how much you can trust those weekly vertical crossovers. How do you determine that? You go back and you look in the past. You look at how your 2-day is performing. You look at what you're seeing on your half day, and you make your decision. But we can see where things peaked back on Monday the 28th and how they were devolving since then. However, we continued to have a large amount of oscillation pushing us over that line as we hit the end of the week. So again, things are moving in the right direction as far as the price percent oscillator and derivative oscillator go. Of course, a slowdown in that movement, but at the same time, that sea change that we've seen occur in the past with those weekly vertical crossovers, extremely powerful in Bitcoin. We've got lots of stuff happening in the world, lots of things that could potentially change that, but we'll continue to watch, wait and see, track, and potentially practice trade, and let the market, let the charts guide us. That's where we are, folks. Thanks so much for being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters. Don't forget, Patreon members. We have live Q&A call-in session this Wednesday, 12:30 Eastern Daylight Time. Look forward to having you join us from all over the world.